So you brought up the kind of regulatory shifts, which is an unavoidable topic, as one might be able to tell from the beginning of the show. And I'm just curious about what your perspective is on where we're at on the risk curve as a venture capitalist, as someone who's been in this for a few years now. Like, how are you feeling today, be it micro today in the middle of a government shutdown, or just coming into the end of 2025 after having a stellar year with the growth of the category? Yeah, where's your head at right now with where risk lies?
The billion-dollar question, Ben. Listen, by nature, we're venture capitalists, so we're investing in risky things. I think I'm very clear with all of our LPs that we have made some investments that have stroke of the pen risk. And whenever you're dealing with stroke of the pen risk, that's unclear, and that it's likely going to be a bumpy ride. And so I always go back to consumer demand will help clarify the risk. And every day that this category continues to get awareness and trial and acceptance, not just by consumers, but by players like, publicly traded C-stores like Circle K or Target saying that they're going to try this out, or bigger and bigger distributors every day recognizing that they need to fill some of their trucks with these new products, or DoorDash, who, is experiencing incredible growth with this category. I think all of those folks are, reflecting what the consumer is demanding. And so my hope is that we'll eventually find rational ways to organize and regulate this category. And I do think regulation is important here, and where it should be distributed. Part of the reason I'm very bullish on C-stores is that C-stores by nature check more IDs on a daily basis than anyone else in the country. And I think that they're a unique place to have this category be distributed at scale. And so I think that brands that understand maybe that's who they're building for, I think are in a unique position.
Yeah, I just learned recently that they have their own software. It's TrueAge, and it's like the most robust ID checking software ever. Yeah, pretty amazing. Also great for discovery. A lot of people make single unit purchases and consume them within the hour. So it's just really awesome data coming out of C-Store channel.
That's right.
Yeah.
So you touched on some risk as it relates to policy and regulatory things, but I think that there's a lot of other risks that either get you to a yes or get you to a no. And those things are things like the team, the business model, the product itself, all of those things. And I think it would be really interesting for our audience to pull back the curtain on your process and for you to share some kind of behind the scenes about getting to a yes or getting to a no, and how many no's you make for every yes that is a yes. Some, behind the scenes.
Yeah. Unfortunately, the nature of our business is that, 99% of the time we're saying no instead of yes. We operate a very concentrated portfolio strategy at Listen, which is unique in the VC world. Like, we only invest in about 3 or 4 deals a year. And we only invest in 10 to 15 companies per fund. A lot of our peers are investing in kind of 30 to 50 companies per fund and playing a more mathematical game. We're hyper concentrated and convicted investors. And so by nature, we try to be and maintain high discipline and a high bar as it relates to what we're looking for. And that is across any category that we're investing in. When it comes to this category, it's one of the first times we've made a decision where we got comfortable with making a couple of investments in the same category versus just one. We typically, when we're excited about a behavior shift, we'll go try to find one investment against that behavior shift to make. But in this category, we think there's going to be multiple winners and multiple positionings that are attractive to consumers. And so we made a decision that we would earmark a certain amount of capital to make a few investments, and we've done so. What gets to a yes? At the early stage of investing, it's probably a cliche by now if you've talked to a lot of VCs, but it's really about the people. You're backing entrepreneurs that you believe can have the grit and the vision to win. Building a business is not easy, but it starts first and foremost with the entrepreneurs and how consumer obsessed they really are. What are they doing that gave them the insights to build what they're building? What's their brand acumen as it relates to standing out and making noise and showing up and activating the brand? And then in this category specifically, like operational expertise and beverage expertise is critical. And so we spent a lot of time understanding margin structure. This is unfortunately a commodity industry eventually, and there will be price compression and margin compression. And if you don't have the margin structure to withstand that eventually, I think it puts a lot of pressure on the business. And so think about that. And then we also like to think about, do they have the capability to activate an omni-channel strategy? So what I mean by that is the digital muscle, obviously for the DC channel is great, but can you also use that digital muscle to drive velocity at retail? And what does that look like? What does your go-to-market look like? How does that help your sales team when they're on the ground, opening up new accounts and showing the retailer what and how you activate around the brand? So those are just some high-level things that we're super focused on when we're making investments.